Imagine getting paid every single month, just for owning a few shares of the right companies. Whether you're looking to boost your passive income or build wealth smarter, these 5 monthly dividend stocks could be your ticket to financial freedom. Welcome to Investment IQ Insights, where we help you make smarter investing decisions faster. If you're into finance, dividends, and building long-term wealth, be sure to hit that subscribe button and turn on notifications so you never miss a money-making opportunity. Most stocks pay dividends quarterly, but a select few pay you every single month, making them ideal for investors looking for consistent income. Let's break down 5 of the best monthly dividend stocks worth considering right now. First up, we've got Realty Income, ticker symbol O. This company is practically synonymous with monthly dividends. Realty Income owns over 13,000 properties, leased to big-name companies like Walgreens, 7-Eleven, and LA Fitness. These are businesses that people rely on no matter what the economy throws their way. Even during recessions, people still need their prescriptions, their morning coffee, and their gym memberships. That translates into steady, reliable rent payments for Realty Income, which means consistent dividends for you. They've been increasing their dividends for over 25 consecutive years, making them a dividend aristocrat. They've actually paid out over 630 consecutive monthly dividends. As things currently stand, Realty Income has an annual dividend yield of around 4.7%. That means for every $10,000 invested, you'd be looking at about $470 in annual dividend income. It's about building long-term wealth and generating a steady stream of passive income. With a track record like Realty Income's, it's definitely a stock worth considering for your monthly dividend portfolio. Next up is Main Street Capital, ticker symbol MAIN. If you're looking for a high-yield monthly dividend stock, Main Street Capital is worth a closer look. Main Street Capital is a business development company, or BDC. They invest in smaller, privately held companies, providing them with the capital they need to grow. Think of it like being a venture capitalist, but instead of taking companies public, they aim for steady returns through interest payments and dividends. Main Street Capital currently boasts a juicy annual dividend yield of over 6%. They also pay out supplemental dividends every quarter, on top of their regular monthly dividends. These supplemental dividends vary depending on the company's performance, but they can add a significant boost to your overall returns. Higher yields often come with higher risk, but Main Street Capital has a solid track record of managing its portfolio and delivering consistent returns for investors. They've increased their regular dividends for over 10 consecutive years. If you're looking to supercharge your passive income stream with a high-yield monthly dividend payer, Main Street Capital is definitely worth adding to your watch list. Now let's talk about a company that's capitalizing on one of the hottest sectors in real estate right now, industrial properties. I'm talking about STAG Industrial, ticker symbol STAG. STAG focuses on owning and leasing out industrial properties, primarily single-tenant buildings like warehouses and logistics centers. With the explosion of e-commerce and the growing need for storage and distribution space, industrial real estate is on fire right now. STAG is perfectly positioned to benefit from this trend, collecting rent from a diversified portfolio of over 550 properties across 40 states. STAG pays out its dividends like clockwork every single month. They've been consistently increasing their dividend for over 10 years. As things currently stand, STAG has an annual dividend yield of around 4.2%. As more and more people shop online, the demand for these types of properties is only going to increase, translating into more dividends for you. For our next monthly dividend stock, we're sticking with the real estate sector, but this time, we're focusing on a REIT that specializes in retail properties. I'm talking about Agree Realty, ticker symbol ADC. Agree Realty isn't your average mall operator. They focus on owning and leasing out freestanding, net lease properties to companies that are considered essential businesses. We're talking about grocery stores, drugstores, home improvement centers, the kind of places that people rely on no matter what's happening in the economy. Think Walmart, Home Depot, Kroger, and Tractor Supply. Agree Realty's focus on these types of tenants makes them incredibly resilient, even during economic downturns. Agree Realty has been increasing their dividend for over 10 consecutive years, and they currently have an annual dividend yield of around 3.9%. While that might not be as high as some of the other stocks on this list, remember that yield isn't everything. Agree Realty's focus on high-quality tenants and their commitment to dividend growth makes them a compelling choice for investors seeking a reliable stream of monthly income. Last but not least, let's switch gears and talk about a different kind of monthly dividend investment, an ETF. And not just any ETF, but one that's managed by one of the biggest names in finance, JPMorgan. I'm talking about the JPMorgan Equity Premium Income ETF, ticker symbol JEPI. Instead of owning shares in a single company, JEPI invests in a diversified basket of U.S. large-cap stocks. Think of it like a mutual fund, but it trades on an exchange like a stock. JEPI's goal is to generate a high level of current income while also providing some potential for capital appreciation. JEPI invests in a portfolio of high-quality blue-chip companies that are known for paying dividends. They also use a covered call option strategy to generate additional income. This strategy allows JEPI to generate extra income on top of the dividends they receive from the stocks in their portfolio. This unique approach has allowed JEPI to deliver an impressive annual dividend yield of around 9.5%. Of course, it's important to note that ETFs do come with expense ratios, which are fees charged by the fund manager. JEPI's expense ratio is 0.35%, which is relatively low compared to some other actively managed funds. So there you have it, 5 powerful monthly dividend stocks that could help you boost your income and build long-term wealth. Whether you're just starting out or you're a seasoned investor, there's a place for these kinds of companies in your portfolio. Monthly dividend stocks aren't just for retirees, they can be powerful tools for anyone building passive income. Make sure to do your own research, understand the risks involved, and consider your own financial goals before making any investment decisions. If you found this video helpful, check out one of these 2 videos on your screen next, especially if you're serious about building a dividend portfolio that works for you 24/7.